Hey, welcome everybody to the 40 Finance channel. Well, Zillow stock. This is one that I just started picking up in October. And if you haven't been watching the news, it just tanked big time heading into today on the announcement that Zillow was closing their iBuying division. Now, the iBuying division is basically Zillow's version of flipping houses, right? So they would make offers through the app, they would buy the house, and then they would try to sell it for more than they purchased for. Unfortunately for Zillow, they were not very successful with it. And as they looked back at the transactions and the load it was taking on the balance sheet and earnings report, decided to pack the whole thing up. They're going to be laying off a portion of their workforce, and they're going to sell all of the properties that they bought under the program. And as of today, the stock has went somewhere in the neighborhood of $100 to about $65 today. So roughly, 40% drop or so over the past 2 or 3 days. And so it brings up the question, of course, especially for me as a Zillow stockholder, is this house fire, the end of Zillow, or is there an opportunity in here to perhaps get the stock at a discount? Now, for this video today, we're going to talk about what is Zillow right now. What is the outlook for maybe the next half year to a full year for a company that's going to take a little bit of time to unwind this decision that they made. These things don't just happen overnight. Today's just the announcement. So let's dig in. Okay, so just quickly summarizing why they got rid of Zillow Offers, and we're going to move on to what it really means for the stock today. So we determined that further scaling up Zillow Offers is too risky, too volatile to our earnings and operations, provides too little opportunity for return on equity, and serves too narrow a portion of our customers. So that's the reasons why. And no doubt right now the internet is full of people laughing at Zillow, pointing at Zillow, talking about their competitors, Redfin and Opendoor. And it's just a big egg on the face moment for Zillow, and that's fine. But let's see what the focus is going forward. All right, so let's look ahead to the future. This just, by the way, is the shareholder letter here that goes before the earnings report itself. We'll be looking at a couple things on here. The change necessitated by today's announcement is the evolution of how we will help a customer sell her current home. That is very interesting that they talk about the customer in a female tone. And that actually is something that you will see some brands do who identify themselves with female customers as their target audience. So, not a Freudian slip here. This is how the brand team is looking at the Zillow audience. Before today, our seller offering was overly focused on Zillow Offers and was able to serve only a small number of the available customer set. Going forward, rather than having to buy a customer's home to help her sell, we are now simply going to help her move. We will expand our view and explore a marketplace of scalable selling solutions that give certainty, convenience, choice, simplicity, and speed, all while addressing the broader opportunity for Zillow. Importantly, we will now focus our offerings on asset and capital light solutions with an open mind as we explore providing these solutions ourselves and or through partners. All right, so what's important there is they're coming off of a business line that's very capital intensive, asset intensive, difficult to sort of optimize a balance sheet when you're holding properties or investing in properties to get them fixed up. Now Zillow is going to go back to the asset and capital light solutions portion of their business, which, by the way, is what they were founded on. So we'll see how that goes. All right, one more here. After careful assessment and volatile earnings, instead of doubling down on a single capital-constrained, risk-heavy solution, we will focus on the broader problem, helping people move. and we continue the mission of creating solutions that can be accessed by everyone moving, not just a narrow set of people who have to negotiate with us as the primary buyer, leaving most unsatisfied. We regret that this decision to wind down our offers operation involves a major reduction in our workforce, a workforce of committed people who have worked hard on a big idea and who we will support well. Okay, so a couple weeks ago when this news started coming out that they were pausing iBuying, that maybe it wasn't as profitable as they wanted, I kind of thought at that time that it was a good move on Zillow's behalf. And my thought process, we only know the details today, but my thought process back then was, well, hell, that was a losing business line anyway. They were not making money with Zillow Offers. So to me, it was kind of humorous when the stock price went down, because I was like, okay, some of the losses the business is taking on just got canceled out. So I saw it as the opportunity to jump in, and that's when I started buying Zillow. Now, the irony of this full escalation that's coming out today is the stock's going down even further than when the announcement was made a couple weeks ago. And I'll say the investors that are down on it are saying a few things. They're saying, number one, this is not the stock that I was promised, right? They purchased a stock with the understanding that iBuying was going on, so now they're disappointed and they're selling it. Number two, you have folks who are questioning management in general, who are just saying, listen, we were supposed to buy into this 3 years ago. Now you tried it, now you're giving up. What does that mean? I'm out of here. Those are the two primary sellers. And then you have the third group, which is sort of like the internet audience, you know, whether they own Redfin, Open Door, or they just like to bitch and complain about corporations in general. They're all rooting for Zillow to die at the stake, which is fine. But you definitely have 3 or 4 negative groups right now pounding on Zillow, and it's driving the stock price right down. So those are all the things that are not working for Zillow right now. Those are all the enemies and the naysayers. Let's take a look at what is working for this company. So here's some stats from the third quarter. The IMT segment, which is basically the media segment, right? That's advertising, that's the app and traffic and selling ads. That grew 16% year over year to $480 million this quarter. Premier agent revenue grew 20% year over year to $359 million. The home segment, we're going to skip, but they came in $1.2 billion, which was below $1.45 billion. Frankly, this whole paragraph I don't even think matters, because we know that we're moving on and you got to sell what assets are left in that business. All right, the mortgage segment grew 30% year over year to $70 million, exceeding our outlook range, driven by increased purchase and refinance loan origination volumes. All right, I'm going to skip on the next two because I just don't think it represents anything towards what the company is going to be a year from now. Zillow completed the acquisition of Showing Time, bringing industry-leading functionality that makes it easier for buyers, sellers, and agents to schedule tours of homes for sale. Company ended third quarter with cash and investments of $3.2 billion. All right, now traffic to Zillow Group's mobile apps and websites, 227 million average monthly unique users. That was down 4% year over year, but up 16% compared to 2019. Collectively, the 227 million people drove 2.7 billion visits, down 4% from a year ago, and up 26% when compared to the same period in 2019. As we know, with so many websites, year-over-year traffic comparisons were impacted by abnormal seasonality in 2020 due to the pandemic. All right, just by those stats, for the core segments, taking out homes, we can see the business is still growing and is actually comping well when you factor in what 2020 was, which is basically everyone full of free time and an explosive housing market. Now, getting rid of Zillow Offers, the homes division, whatever you want to call it, is going to create a problem for shareholders like myself over the next 6 to 9 months. And here's where the problems are going to be. Number one, data is going to be difficult, okay? So measuring comps, measuring sales performance, trying to figure out how the write-downs take place on the properties that they own, what they really should be doing from a traffic and revenue standpoint. It's all going to be a big mess, and it's going to be really hard to decipher. Now, Zillow mentioned on a press conference that they were going to sell most of their houses to institutional buyers. We think about BlackRock and some big dogs with big wallets. And I know a lot of people are like, oh, that's crazy. You're selling it down to pennies on the dollar. And that's correct. But if you have a unique problem like this, where you have thousands and thousands of homes, you're trying to unwind a business, get back to normalcy, and starting to build shareholder value, I want you to sell the whole daggone lot of them for the best price you can get and move on with the business, okay? At the end of the day, from a tax standpoint, closing this business line is a loss. And so it offsets some of the taxes that they will owe in other areas where they gain. So it's going to be a circus for the next 6 to 9 months. But my guess is by the time we get to at least Q3 of next year, the majority of this stuff will be settled out and we can start talking about growing the business from there. All right, so what do we think about Zillow at its current price of $60 to $70, depending on where it lands? Well, looking over here at Stock Rover, which you're going to start to see a lot more of Stock Rover on this channel. I have just started a little partnership with them. You can check out the link in my description for a free trial. So if you want to explore Stock Rover a little bit, link in the description, free sign up, 14-day trial. Very inexpensive tool with a lot of options. If you're curious, Premium Plus, that's the subscription level that I'm on. But while we're at Stock Rover here today, is to focus on the football field, they call it, for Zillow. And what this is a valuation indicator over the past 5 years for Zillow. So remember, 5 years keeps into account the time before Zillow Home, Zillow Offers was on the marketplace, right? That was before they even made that announcement, I believe, in 2019. So we don't really have a PE to work with in real terms because they use non-GAAP numbers. But our EV to EBITDA at approximately 56 is certainly the lowest you've seen. 260 would have been the highest one. Price to book at 2.9. Price to sales currently at 4. And you see the range down here over the past 5 years, 2351. I'm guessing that's 5 years ago. Up to 203. Now, what I'm anticipating out of Zillow, once the smoke clears on this disaster, is we will start to see a gap price to earnings. We will start to see our cash flow numbers populate in here. I doubt we'll see a dividend yield, but some of the things that were, let's just say, fundamentally wrong with this stock, as far as ratios and fundamental values, are about to get cleaned up pretty nicely over the next year or so. All right, let's take a look at TipRanks to see what the best performing Wall Street analysts have to say. And scrolling down, trying to follow these dates here. We got a bunch of people who called back in yesterday, analysts who revised their presentations. These are all 4-star analysts. We have mostly holds, I would say. 1, 2, 3, 4, 5, 6 holds. 1, 2, 3, 4, 5 buys, and then 1 sell. And most of them have a price in the $85 range, I would say is the average, 80 to 85. Be interesting to see if they update these because the stock's already down to 65. And the person who did say sell had a downside price of 50. As we look at the top here, current price as I'm recording, about $65. All right, so my thoughts on Zillow personally, I'm hanging on to my shares. My cost basis was in the neighborhood of $87 or $88. I bought about 10 shares this morning. It's dropped into the 60s now. I bought around $70, and now we're in the 60s. I'll probably buy another 10 shares. That'll bring me to roughly 60 or 70 shares. And my goal with Zillow is to get to at least 100 shares. I'm not in a huge hurry to do that because it looks like we could see some downturn for a while. But I do think there's an opportunity here for a company that made a big mistake, has some egg on their face. They're going to write some stuff off. But let's be honest, this was not a business they were good at. Okay, so while the pipe dreams were out there, that maybe that they were going to turn this home buying segment into a real monster, the fact of the matter is they recognized that they weren't good at it, and they're closing it down. It's going to be a rough year from a balance sheet perspective. It's certainly going to be a rough year for comps going forward because we don't have a lot to compare to. We're going to have to make our comps between basically 2018, 2017, and now to sort of measure some of this growth. But at the end of the day, if you're 3 to 5 years from now on Zillow, I think it's worth watching at the bare minimum. But for me, the popularity of the app, not to mention some of their secondary websites that nobody talks about, and their new focus on the customer who's trying to sell their house and or move. I like the odds there. I like the size of their audience. So I'm willing to give it a chance, and you will likely see me buying more Zillow during this period. All right, guys, let me know what you think about Zillow in the comments. Are you a Zillow hater? Are you rooting for Redfin, Open Door, anti-corporate? Do you hate Zillow? Are you buying in on this potential opportunity? Let me know in the bottom. As always, please like, share this content. I appreciate it very much. See you on the next video.